Are you going to be retiring into one of the top 10 most tax-friendly states for retirees? That's what we're going to get into in today's video. Stay tuned. Welcome back to the channel. My name is Derek Coffey, and I'm the founder of FWP. And if you weren't aware, the state that you plan to live in during your retirement plays a major factor in your retirement plan. From income taxes to estate taxes to personal property taxes and even sales taxes, all of these things have to be accounted for as you prepare for your retirement. Now, all of the hard work has already been done. This article that was done by Kiplinger has laid out what the top 10 most tax friendly states are as of 2024. The first state on our list is Texas. And a common theme that you're going to notice throughout this list is that these states don't tax retirement income. For most of these states, they also don't have an estate tax, at least at that state level. Texas checks both of these boxes. Now, on the flip side of that, you do have to worry about personal property taxes. And the state of Texas actually has the highest median property tax bill on this list. In 2023, that median tax bill was over $3,800. So if you do plan to retire in Texas, you need to budget for around $300 a month just to own your home. Also, in the state of Texas, you have to worry about their state sales tax, which, depending on where you live, can be upwards of 8%. Now, they do you the favor of excluding groceries, prescription medications, and over-the-counter medications, and these are all good things for retirees. But for anything else that you need to purchase living in the state of Texas, you're going to have to pay that 8%. Coming in at number 9 is the state of Alaska. Now, just like Texas, you don't have to worry about an income tax or a state-level estate tax. And if you're a full-time resident of the state, you get to participate in the Alaska Permanent Dividend Fund. Now, the purpose of that fund is to take monies that the state receives from oil and mining operations and invest it for the benefit of Alaska residents. In 2023, that dividend payment per full-time resident was just over $1,300. Now, with the good, you have to take the bad. In the state of Alaska, personal property taxes are a little high. In 2023, the median tax bill was just shy of $3,700 for the year, so you still have to budget that $300 a month for your personal property taxes. In the state of Alaska, there are no state sales taxes, at least at the state level. You do have to worry about local sales taxes, and depending on where you live, that could be upwards of 7%. The other thing that you have to take into consideration is the overall cost of living. Now, it's not necessarily a tax per se, but living in Alaska in general is about 10% more expensive than if you lived in the lower 48. So if you do plan on retiring in Alaska, you have to make room in your budget for these increased costs. Coming in at number 8 is the state of Pennsylvania. Now, Pennsylvania is a little bit different than Texas and Alaska because they do have a state income tax. But once you reach age 60 or older, you don't have to pay state income taxes on your retirement income. So money you receive from pensions or distributions that you take from your IRA, any money you receive from Social Security, you're able to receive that money without having to pay any state income taxes. Now, with Pennsylvania, there are a couple of negatives that we have to deal with, and the first of which is the property tax bill. In 2023, that median bill was $3,100, so not as high as Texas or Alaska, but it's still on the higher side. We also have to worry about state sales taxes, which are 6.17%, plus any additional local sales taxes you may have to pay depending on where you live. Now, Pennsylvania is the first state on our list that has a state-level estate tax. So if you pass away, anything you pass on to your beneficiaries is going to be taxed at some level. It just depends on how you're related to them. If they are your direct descendants, so your children, for instance, then they're going to owe 4.5% on all of the assets they receive. If they are your siblings, they're going to owe 12% in estate taxes. And then anyone else that you leave your assets to, they're going to owe 15% to the state in estate taxes. So if you plan on retiring in the state of Pennsylvania, it would be a good idea to meet with an accountant, meet with a lawyer, and set up an estate plan that's going to help you avoid as much of these taxes as you can. Next on our list is the state of Iowa. Now, just like Pennsylvania, they do give you a tax break on retirement income that you receive. The only difference is you get that tax break 5 years sooner. In Pennsylvania, you have to wait till age 60. In the state of Iowa, you only have to make it to 55. You still have to worry about property taxes. In 2023, the median property tax bill in the state of Iowa was $3,000. And you also have to worry about sales taxes. Sales taxes can make it up to 8% depending on where you live. So, retiring into the state of Iowa, you have to keep these things in mind. Now, there are estate taxes. They're much less than what you would pay if you retired in the state of Pennsylvania, but it's still something that you need to plan for. The estate taxes in Iowa range from 1 to 3%. It just depends on your relation to the people that inherit your assets. Coming in at number 6 is South Dakota. And just like some of the other states that we've already been over, there's no state income tax that you have to worry about. There's no estate tax that you have to worry about. You still have your property taxes, which South Dakota is the first state on this list that comes in under $3,000. The median tax bill in 2023 was just shy of $2,500. You still have to worry about the sales tax in the state, which is just over 6%, but they do give you a tax break on groceries, just over 4%. Next, we have the state of Florida, and you may be a little shocked that Florida comes in at number 5, but there are a lot of moving pieces with living in Florida. It is very tax efficient. You don't have to worry about a state income tax. You don't have to worry about an estate tax, but there are other things that you have to worry about paying. You still have your personal property taxes, which in 2023, that median bill was just shy of $2,400. You still have to worry about the state sales tax, which is around 6%. But in addition to those taxes, Florida also has a higher than average fuel tax. Now, it's not as high as Pennsylvania. Pennsylvania charges 58.7 cents per gallon of fuel that you consume, but in the state of Florida, it's 36.5 cents. So again, it's not as high as some of the other states, even states that are on this list, but it is still an expense that you have to be concerned about. Another thing that I want to point out about Florida, again, it's not a tax per se, but when it comes to living there, you do have to deal with higher than average homeowners insurance. Depending on where you live in the state, at least according to the National Association of Realtors, you could pay as high as $11,000 per year for your homeowners insurance. And a lot of this has to do with the fact that Florida gets hit with hurricanes from the east and the west. Hurricanes come off the Gulf, they also come off the Atlantic, and it causes a lot of damage in the state. And there are a lot of major insurance companies that no longer operate in Florida. Farmers, State Farm, and those are just a couple, no longer offer homeowners insurance in the state of Florida. So the options that you're left with, you're going to pay a pretty penny for. So retiring to Florida, it's a great idea. The weather is wonderful, everything is wonderful, but you still have other expenses that you need to account for. Coming in at number 4 is the state of Nevada. Again, like a lot of the other states, no state income tax, no estate tax that you have to worry about, and the personal property taxes are fairly low. This is actually the first state on this list where the median personal property tax bill in 2023 was less than $2,000. Now, the one caveat to Nevada is their sales tax. The local and state sales taxes combined can easily exceed 8%, depending on where you live. Now, this does exclude groceries and prescription medications, but everything else that you're going to need, you're potentially going to have to pay an 8% sales tax on. So despite all of the other tax advantages that Nevada offers, you still have to be prepared to pay that higher sales tax. Coming in just ahead of Nevada into the number 3 spot is the state of Wyoming. Wyoming, no state income taxes, no estate taxes that you have to worry about, and the median tax bill in 2023 was just over $1,500. You still have to worry about sales taxes, which in the state of Wyoming is 5.36%. Your groceries and your prescription medications are excluded from that sales tax. The one thing you have to keep in mind about Wyoming is that the cost of food is typically 10% higher than other states. Again, this is not necessarily a tax that you have to worry about, but it is an increased cost that you have to factor into your retirement plan. The second most tax-friendly state in the US is Tennessee. There's no state income tax that you have to worry about. There's no estate tax that you need to plan for. And the median property tax bill in 2023 was just $1,400. Now, the one thing that you have to plan for are sales taxes. Tennessee has a state-level sales tax of 7%. Depending on where you are, local sales taxes can get you up over 9%. Now, your groceries are still taxed, but it's much less than that 7 or 9%. It's only in at 4%. But everything else that you're going to need to purchase could potentially be taxed at 9%. So you have to factor this into your budget if you plan to retire in Tennessee. And then finally, coming in at number one is the state of Mississippi. Now, I know I personally didn't think of Mississippi as being the most tax friendly state in the US. I would have thought Texas, Florida, somewhere like that. But Mississippi, by the numbers, is the most tax friendly state in the US. There's no income taxes that you have to worry about. There are no estate taxes that you have to worry about. And the median property tax bill in 2023 was $1,145. Now, just like all of the other states that don't tax income and they have lower property taxes, you are going to pay more in sales taxes. In the state of Mississippi, that state level sales tax is 7%. So if you do plan to retire to Mississippi, just know that you're going to pay 7% on top of what you see on the price tag for everything that you need. So you may have noticed that all of these states operate somewhat similar to one another. None of them tax retirement income. Only two of them, Iowa and Pennsylvania, have an estate tax that you have to plan for, but all of them had a little bit elevated sales tax. Now, sales taxes are commonly referred to as consumption taxes because you only pay the tax when you purchase something. Consumption taxes are regressive because everyone's paying the same percentage regardless of how much income they make. But the good part about a consumption tax is it does give you a little bit of control over the amount of tax you pay. If you decide to price shop the items that you're hoping to buy, when you pay the lowest price, you're going to pay the lowest amount of taxes. Now, obviously, when it comes to determining where you want to retire, there is more to making that decision than just taxes. You should be factoring in access to healthcare. You should be factoring in your access to public transportation. As you get older, you probably shouldn't be driving as much. But my hope is with this video is that regardless of where you plan on retiring, you at least start thinking about the tax consequences of your decision and then planning for them accordingly. I want to thank you so much for tuning in. If this video or any of the other videos that I've put out has provided you value, then hit that subscribe button. If you know someone that's planning on skipping town as soon as they retire, then send this video to them. Maybe it'll get them thinking about the tax consequences of that move. I want to thank you so much for tuning in. I'll talk to you soon.